Okay, today I want to talk about my GBP USD trade, which I entered on the 5th of August 2009 and exited on the 6th of August 2009. It was a short trade. Basically, it was based around long-term levels. Today I'm going to talk about how important it is to know where these levels are and how price can react around those sort of levels to net you a lot of pips. So this trade in particular netted me about 254 pips, which is not bad for a day's work. Before we go into the trade, I want to say thank you to everyone that's donated to my Just Giving account. The link is on the bottom of the video. If anyone could donate anything, that would be much appreciated, as it's all for cancer research, it's all for a good cause, it's all for charity. So yeah, if you could spare any money, then that would be great. Okay, so what we're doing here now, we're looking at the daily GBP USD. You can see yesterday, which is what the price action was, this strong bullish sorry, what am I on about? Sorry, this bearish engulfing candle you can see here. Pull back to the 8 EMA, which is this gold line here you can see. Okay, so where do we start at the monthly chart? You can see where the price action was at that time when I sold it, which was the entry that I sold it at was 170.34. So if you look at this, the high is 42. The reason why I sold it there is because you can see the 21 EMA, which is pulled down a bit now, it's at 69.96. That was actually at 34s. So that's not the only reason why I sold it, but that's one of the major reasons. Don't forget, this is the monthly, longer term, much longer term time frame EMAs and levels tend to hold a lot better than shorter time frame ones. So that's bearing in mind, something you should always look out for. Longer term time frame. Definitely support and resistance lines and definitely EMAs do, basically they do hold in a lot more than shorter time frames. So you can see that there's this level around here. If you look around here, so there's something from 170.48 to 171.70. Now in that region there, you can see where my crosshair is. This region around here, obviously it's here as well, and this is exactly where we are, where it popped up to here. Now, not only from this, it's just basically a convergence of studies of why I sold this. So you've got the 50% retracement from the last down move down, as you can see here. So this is the monthly, don't forget. So these levels will be key in shorter time frames. So anywhere around the 69 region, you've also got the 21 EMA. You've also got this support. Well, it is support here, which then will roll reverse and turn into resistance right here. So that is basically what you're looking for, and where you're kind of thinking, right, the market might turn around here. It might be an aggressive place to get short for a high number of pips. So if we go into the daily chart, it moved up. You can see that when it got to this region here, which is also the 50% retracement line, as you can see from the monthly, the candles start to lose momentum. You've got a spinner here, you've got another spinner here, and then obviously yesterday you've got the aggressive move down. But these two candles here are thinking, right, okay, if price action is really going to continue on this upwards direction from this high move, this high rhythm move, so these candles showing high emotion, lots of rhythm in the market, lots of emotion. They're all belt holding candles, showing that there are higher prices to come. As soon as it comes to these point here, you can see that something's happening, because no longer are the bulls in control, and the momentum is lost from the market. So basically, there's something around there which is causing this to lose momentum. So if we go into the smaller time frames now, this is the 4-hour. Don't forget. Okay, so this is the move up, the aggressive move up as we had, and we had a long trade around this region here the other day on the 5th. Now, ever since it reached this level, which is obviously the 20, you've got to remember, at this level here, you've got the 21 EMA on the monthly, you've got the 50% retracement line, which is just around here, 69s, so that's there as well. You've also got that support and resistance line from much back in, much back on the monthly chart. So there is definitely something here, and you can definitely tell, if you look at the candle patterns, that you've got an aggressive move up. You'd really expect this to continue up and the 8 EMA to take control. However, that's not what happened. So this is your key candle here. This is exactly where we exited on our long trade, and this is exactly where we got short. So you can see that this candle here closes above all this here. So if you look at these candles here, this is exactly what happens. These little candles here waits for the 8 EMA to catch up, pulls away. Wait for the 8 EMA to catch up. Little candle pulls away. Waits for the 8 EMA to catch up. These are all these little spinners here, nothing really happening. Then this candle here is your key candle. This is your bullish engulfing candle, which you can see engulfs all of this here. So then you'd expect higher prices, which is exactly what happened. So you get long of around about there, or if you can get a pullback, even better. Get long there for about 100 pips, I think we netted. So it comes up here. Now really and truly, you'd expect that this from this candle here, you'd expect price to really close above this and to really roar on up. This is at new highs for the year, so it hasn't been at this level for about 9 or 10 months now. So you really expect, if this was true to its word, it would go, and people would be buying it up. However, that's not what happened. You can see that the candles became really tight. You've got some spinners. You've got a shooting star here. This is almost a hammer, but it didn't close above this candle. You see, if this hammer had closed above here, of this candle here, then that would be a point of exit, because that shooting star is no longer valid. So basically, I sold it around this region here, which is pretty much near the highs, which was at 34s, I think it was, which was there. So I sold it at 34s. My stop wasn't that far away, to be honest. I was using quite a tight stop on this, simply because we're in a roaring uptrend. I don't want to be caught on the wrong side of a whipsaw up to the upside. As soon as I seen this hammer here, didn't close above this candle here, I was pretty confident that we were going to see lower prices ahead. Now, if you look at the video which I uploaded on the 5th, you can see my price target was this 28 level here. However, that's not exactly where I came out. So as you can see, this is the hourly chart now on the GBP USD. Now we sold it around this level here, so 34s, which was there. Now my stop at the rate decision, as I said before, not many people trade rate decisions, and I don't advise you keeping a position open over it. You have to be quite experienced, and you have to have quite a lot of confidence in yourself and your abilities to hold positions if they go offside. However, my strategy for this actual move was that, okay, it's come up here, an aggressive move up, and it's failed to put in a higher high around this region here. So therefore I set my stop to 34s just before the rate decision. So basically, worst case scenario, I was going to walk away with no loss but no profit. So that was the risk I decided to take. This is the rate candle here. Obviously it didn't go up straight away. People seen that they're going to increase the quantities in. So from 69.70s, it dropped literally in a straight line down to 22s, which was a really aggressive move down. Now, if you go to the 5-minute chart, I'll show you exactly how I kept in this trade and didn't come out at my profit target. Okay, so this is before the rate decision. This is obviously the rate decision. A really aggressive move down. That's a strong candle down. I think actually it might have even hit my profit target on my initial, on the first 5 minutes it hit it. As soon as it was trading down at 69s and 68, 80s, around that sort of region there, and it taken out that level from the hourly chart. I'll show you that quickly. So as soon as it had taken out this level around here, 68 80s or 68 90s, at that region there, quite comfortably without even hesitation, that's exactly when I thought, right, okay, I'm going to ride this out. Use basically the 5-minute chart to exit this trade. So yeah, price came down all the way to 28, bounced back up. There was another great entry there on the 55. You could have got in at a later stage, which was back at 69.09s. And from then basically it just went down and down and down. You can see the it went down and down and down. This is a bit confusing because it's such a strong move. So the candles are really small. So where I came out was this region here. If I just try and get this, if I zoom in, okay. So this is exactly where I came out. You can see at this point, this is really confusing for you guys. Okay, so you can see that the move down is a lower low, and then a lower high, and then down again, which is a lower low than this here. Comes back up, which is a lower high than this here, goes back down again, makes a lower low. So at this point you're like, right, okay. At this point I'm going to zoom in because otherwise it's going to get really confusing. So this point here is your lower low. So you'll find at this point, you're moving your stop down behind the highs of the 5-minute chart. Don't forget. As soon as this candle happens here, at 20 past 7, GMT, takes out that high which is there. So that is it. You know, your stop should be at 80s, right where that high is. This 81, I think my stop was at 80s. That's exactly where your stop should be, and that's exactly where I got hit, which was 67 80s, and that's exactly how you net as much profit from a trade like that as you can. Hope that explains a lot of different stuff there. You know, you've got a lot to be going on with. There's a lot to be digesting there, and you know, it takes a lot of practice to do what I've done there. So don't go ahead and do it on live. Obviously, do it on a demo account first. If you've got any questions, which no doubtably you have, then give me an email. My email is on the YouTube channel. Also, subscribe to my YouTube channel to receive regular updates of videos, which I'm you know, slowly putting up there. And please rate the videos and comment on them. Okay, thanks very much.